morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, May 22nd. Mostly lower trade overnight across the ag space, led by a sharp pullback in bean oil prices. Bean oil did gap lower overnight. So far, however, has held Friday's low at 47.63 for the spot July contract. Later today, the White House and the Office of Management and Budget is expected to meet to discuss the EPA proposed mandates and tax credits for biofuels. Earlier this week, a group of House members sent a letter to President Trump urging his administration to raise the RVO levels to 5.25 billion gallons annually, up from the current 3.35 billion. We'll see the results of those meetings hopefully later today. President Trump's big, beautiful tax bill extending tax cuts from his first term narrowly passed the House this morning, where it now goes off to the U.S. Senate. Right now, bean oil prices are down about 135 points. Beans are 5 to 6 lower. Meal is $1 to $2 higher. Feed grains also backed off here overnight, although well off session lows. Corn has actually recovered now, with July up a half cent. New crop is down a penny. Wheat prices range from steady in Kansas City, Minneapolis, to down about a penny or two in Chicago. Day one of a crop tour in Illinois projected yields in the state at 106 bushels an acre, up from last year's tour at 104. Yesterday was just day one of the tour, where they toured 89 fields across the southern third of the country. These yields are well above the USDA projections in earlier this month. However, the tour did note, despite the strong yield potential, that does pose significant risk to disease, given the wetter than normal conditions with more rains on the way. Export sales later this morning. Yesterday's EIA report did show ethanol production rebounded to 305 million gallons last week. However, that was still below the pace needed to reach the USDA corn usage estimate, and now has fallen below that pace for a seventh consecutive week. Seasonally cold and dreary conditions will persist across the north, central, Midwest, and Great Lakes region for another day or two. Drier conditions will gradually emerge across the north. However, temperatures will remain in a below normal pattern here through the end of the month. Heavy rains will persist across the southern Midwest and Delta regions, with flooding potential for areas of Missouri and northern Arkansas, which may prevent some of this year's projected corn and soybean acres from being planted. Extended forecasts keep conditions cool across much of the eastern Midwest, with above normal temperatures building in the west. In South America, rains in Argentina will be most heavily concentrated in the northeast. We will get harvest updates from the Buenos Aires Grain Exchange later today. Rains in Brazil and the deep south, however, some rains could leak into west central growing regions, providing a little bit of a late boost for their second corn crop. Corn prices have recovered now, as mentioned here in the July. As we await the export sales, DEES is back above its 100-day moving average at 454.5. Next resistance there for the December contract, not until the April high, which is at 469.5. The market seems to have shrugged off an extremely high production forecast from Agro Consults yesterday for the Brazilian crop. Bean prices also recovered here from the overnight lows. Prices just seem to settle down a little bit here in recent sessions, having recovered a large portion of last Thursday's price plunge. Still awaiting updates on trade negotiations with China. Next resistance for November, that comes in at 1065.5. Meal is higher as it plays teeter-totter with bean oil prices. July meal remains stuck between $290 and $300 a ton. Wheat's recovered a big chunk of the overnight losses. Funds continue to chip away at their mammoth short positions. Open interest did drop 10,000 in Chicago, down 1,000 in Kansas City. Thanks for listening, everyone. Have a great day.